and welcome to my channel. For those of you new, my name is Dave and I work in financial services, and these videos are a mixture and journey towards financial freedom. They will cover financial products and financial well-being so you, like me, can reach your goals and aims sometime in the future. Now let's get into this latest video. This video is about a review of my stocks and shares I issued during the month of December 2022. It's not to boast or brag, it's not investment advice, it's my own personal opinions, but it's my aims for the portfolio moving forwards. So a summary of how it's done, what sort of holes we have, and what are the aims for it moving forwards. First of all, 2022 has been somewhat of a sporadic year. Look at the following chart, just an overview of the FTSE 100, how it's performed during 2022, and the FTSE was one of the best performing markets. It was down less than 1% during 2022. When we do some kind of comparison, the major markets in Europe were down about 10 to 12%. The S&P 500 was down 19%, and the Nasdaq was down 34% during the year. What sort of effect has that had on our own personal portfolio? When we look at the following chart, we started January 22 with a portfolio valuation of £59,722, and we finished the year to date on £71,352, an increase of £11,500. Now during the year, our return was minus 5.22%, but a quick comparison over the past 4 years since we've been recording our portfolio, we've made an annual or an average return of 14.4%. So we will have good years, we will have bad years, but it just goes to show it's a long-term view, it's a long-term investments. For those of you new, the original plan for the year was annual growth of 10%, dividends from our shares of £1,200, and a year-end fund value of £80,000. So we were roughly £8,500 below that valuation because we never got our growth of 10% within the year. Now during the month we made contributions of £600. We look at the following graphic, total contribution this tax year of £16,632.52, and hopefully by the end of 5th of April, end of the tax year, we will use our full ISA allowance for this year. If we don't use it, we will lose it. Predominantly based in the financial services, as you can see looking at the graphic. During the month, our platform provider fees were about the same, £11.77, and we have performed, shall we say, better than expected because we're solely UK based. Mainly because where we're based and our preference for the shares, which we hopefully know about. Following chart, 62.29% in UK and Europe, 22.74% in USA and Americas, and 14.97% across Asia and emerging markets. And those percentages have stayed quite steady on a month-by-month basis. And it is our intention to stay at them levels moving forwards. We will invest across global shares, but predominantly UK-based shares. And during the month, we received one dividend. Now, we only record the dividends from our shareholdings. Across our shares, we got a yield of 4.96%, and the shareholding company was from Sainsbury's, the retailer. It gave us £32.40, which we reinvested. It gave us 30 new shares, and for the year to date, we made £1,533.41 in dividends, so well above our expectations at the start of the year of £1,200 or £100 a month. But we don't record the dividends from our funds, we only record the dividends from the shares we receive within the portfolio. Let's dive into the portfolio. So what sort of shares or funds do we own? So first of all, moving on to our shares. At the moment we own 9 shares, 7 in profit, 2 in loss. Total share value £32,217, makes up 45% of our portfolio, of which 39% is in the FTSE 100 and 6% is in the FTSE 250, Now, they're all long-term shares we've bought on our own assumptions or recommendations. Shares we're happy to hold for the next 3 to 5 years. Now, I'm not going to go through them all, you can see from the graphic, but just an overview. Our largest holding is Legal & General, 3,165 shares, £8,000, 11% of our portfolio. Safe, secure, boring, shall we say, insurance company, but was giving a very good yield of nearly 8%, which will be reinvested within that particular company. Our next holding is Lloyds, the banking group, 16,369 shares, £7,500, 10% of our portfolio. It was till recently our largest holding. But again, it was done, it's given us a small yield, will be increased, but interest rates will go up, margin will increase, a very long-term player. And then back to the insurance companies, Aviva, 1,129 shares, £5,000, 7% of our portfolio. Again, like Legal & General, safe, secure, covers insurance, it covers pensions, it covers investments, but again, it's given a very nice yield of nearly 7%. Our next holding is one we've increased during the month. It's Card Factory, the retailer, 3,207 shares, £2,500, 3.5% of our portfolio. It did have a very good trading statement. The shares have been on somewhat of a rally lately. They have struggled in the past, but we did top up with an additional £300 during the month based upon the results in the trading statement, but a very long-term buy, and it is a very cash-rich company. Our next holding is back to the banks, Barclays, 1,538 shares, £2,500, 3.4% of our portfolio, and also on the banks we own NatWest, 832 shares, £2,000, nearly 3% of our portfolio. Safe, secure, steady, but was giving a special dividend last year. Who knows what happens moving forwards, but hopefully the government will reduce its stake and the shackles were off. It'll give it more of a free run moving forwards. And then back to another share we topped up during the month, AJ Bell, the platform provider. We own 514 shares, £1,800, 2.5% of our portfolio. Again, a very good trading statement. Assets under management increased, a lot to new customers, has brought out some new exciting platforms for beginners investors, and again we topped up with an additional £300 of shares during the month as a long-term play, and the dividend was increased during the recent results announced. Our next holding is Sainsbury's, the retailer, 844 shares, £1,837, 2.5% of our portfolio, but it did give us a small dividend of the month and we did reinvest it within those companies. And then finally, our smallest shareholding is HSBC, the global bank, 236 shares, £1,200, 1.7% of our portfolio. So some good companies, some well-established companies, all safe, secure, and hopefully they will be all in profit over the next few weeks and months as some kind of recovery, but they will give us very good dividends. And then moving forwards, we're hoping for excess of over £2,000 in dividends during 2023. And now on to other funds within our portfolio. At the moment, we own 12 funds, 7 in profit, 5 in loss. Makes up 54.79% of our portfolio. Total fund value, £39,097. Again, not going to go through them all, but just a quick overview. Our largest holding by a mile is a passive adventures tracker fund. Very low fees, it was done for diversification. Nearly £15,000, makes up 21% of our portfolio, and we will increase that fund moving forwards for ease, shall we say, for diversification, to reduce the number of funds we hold, okay, and obviously on a cost basis, very low fees and charges within that fund compared to our actively managed funds. Our next holding has struggled lately. It's a Legal & General Technology Fund, nearly £6,000, 8% of our portfolio, currently owns 261 shares across the tech sector, but a long-term hold, but the tech stocks have struggled during 2022. Our next holding of note is a value given positive change, £3,600, 5% of our portfolio, quite selective, small number of shares, ESG, but all good quality companies. And then a fund which has struggled lately is a China fund, £3,000, 4% of our portfolio. It was bought as obviously China's a long-term play, but market sentiment towards China and emerging markets has been somewhat dismal towards the last 12 months, hence the reason for the performance. Other shares we note of size is a US smaller companies, £3,000, 4% of our portfolio. We own a mid-cap fund, £2,000, 3% of our portfolio. We own a European fund, we own a small caps fund down to our Russia fund. We did put £500 in, it went up to £600 plus. Obviously Russia-Ukraine conflict happened, it's now down to £243, but thankfully it makes up a very small percentage of our portfolio. But just like our shares, all done for a reason. We may well simplify them moving forwards, okay, because we've got 12 shares, may well be duplicated, but they were bought for a specific reason. And we see no reason why we'll sell any of them shares based upon current conditions within those shares held. Now remember, these are my own personal opinions, okay? It's not a get-rich-quick scheme. We've had a bad 2022, like most investors, but we've averaged 14% over the last 4 years. And we're hoping for 10% moving forwards, and we will use our annual allowance 2022. Who knows what happened 2023 from April, and we will, shall we say, reinvest all dividends within the portfolio, and we will top up our existing holdings on a regular basis. Remember, if you like the videos, smash the like button, subscribe to this channel, and we'll see you again in the next video.